Good morning, traders. Welcome to the Flow Show. It's April Fool's Day, 1st of April. Be on the lookout for any gags and japes being posted around the social media. You might see the odd one or two. Be careful. There's a lot of people willing to try and joke their way through the first part of this morning. So let's not try to be April Fools in our trading today anyway. Right, where should we start? Let's start with some data. And over in China and Japan, we'll start with Japan first. One of the big data points that some, or if not all, of the Bank of Japan are looking at is the Tankan survey here. So we've got some details out. This is sort of like the manufacturing index survey thing for that. There's lots of numbers, lots of different components and whatever. Largely, the numbers have dipped slightly. So the large manufacturing index dipping to 12 from 14, which the wires kindly point out is the lowest since about March 2024, so last year, but it's only a 2-pip drop. Seen a pip drop in the big manufacturing outlook index as well. There's still positive numbers though. Non-manufacturers, that's coming unchanged, was expected to rise. Large non-manufacturers for Q1, that's up. All in all, not too much negative numbers there. Some slight misses, as I say, some minor pullbacks on that, but overall it's still trucking along. So going all fine and dandy there. While we're staying in Japan, the BOJ gave its intervention report. They did nothing from the 27th of February to 27th of March, not that we were expecting them to, or conditions would suggest that they had to do that anyway. On the PMI front, manufacturing, they saw a pip rise in their number there to 48.4 from 48.3, but still in contraction and more so than it was the month before. Over in China, they saw an improvement. This is the Caixin report, so the private one, not the Stats Bureau one, improving to 51.2 for that. Australia retail sales coming in ahead of the RBA, slightly softer than expected, 0.2%. They also had their PMI out, which fell back to 52.1 from 52.6. That was a final reading there. The RBA, as you can see there, kept rates unchanged at 4.10%. In the statement, they said the outlook remains uncertain and inflation could move in either direction, although underlying inflation is moderating. Governor Bullock in the press has said there's a chance there's more strength in the economy than it seems. Says she's engaged with other central banks amid heightened global uncertainty. And emphasises the need to avoid premature policy moves. She confirmed that the board did not explicitly discuss a rate cut. So holding rates was a consensus decision. They still think the labour market is tight. The CPI path is uncertain. The budget didn't change much. The tariff impact is unclear. And the board is well positioned for any shocks. So no real hints that a cut was considered or that one's on its way, and they're jumping into the same, we don't know what we're doing or what's happening regarding trade, tariffs and all the rest of it. So they firmly buttocks on fingers for that one moving forward. No real change there at all. Coming over to some of the data in Europe and the UK, we got the Spanish manufacturing PMI, which dipped 2 points, was expected to go up a point, but it dipped instead, still remains in contraction. Italy, they also went backwards, 46.6 from 47.9 expected, 47.4 previously. The final French number came in worse, 48.5, worse than the 48.9 flash, but still an improvement over last month's 45.8. Same with Germany, came in lower than the flash number, but still books an improvement over last month. All of these still in contraction though. UK number as well, if I can find it, there we go, coming in at 44.9, so again up on the flash number, still down on last month as well. The Eurozone, pan-Eurozone number looking pretty much the same there too at 48.6. We've got the first flash CPI data from the Eurozone, so the pan-Eurozone measure. CPI coming in as expected, confirming a pip loss to 2.2%. But the core came in lower than expected, 2.4% versus 2.5% expected and 2.6% prior. So we're still seeing inflation creeping lower in the Eurozone. And that's despite most of these surveys, PMI surveys, indicating that there are still price pressures in play in all but Germany, which actually saw a bit of continued price pressure easing there due to the lack of activity. So you've got to remember these survey data, what happens in those doesn't reflect that quickly into things like CPI. CPI is a very lagging measure. Okay, so if prices are rising today, you're not going to see them in next month's report. You're going to see them in reports 3, 4, 5 months down the line. So as much as we're still seeing inflation coming down, if those price pressures remain in the other sectors, we're likely to see these creeping back up again at some point. Riksbank's Janssen says the crown appreciation is something to feel good about in all this mess and a reason for optimism on inflation. They say that their currency hedging will be maintained. RBA's Green says slack is opening up in the UK labour market. Wage growth is above what our models can explain. Though disinflation continues to be underway. Inflation expectations have been rising and inflation expectations remain anchored. So are they anchored or are they rising? What are they doing? Pretty much Green, the same as the rest of the BOE bods and other central banks, have absolutely no clue what's going on nor how to react to it. We got a sources piece on the ECB yesterday, which is a bit unusual, just out the blue. There are apparently more ECB officials are ready to accept keeping rates on hold in April. The Doves may be given a bit of concession to the Hawks, some of which, like Holtzman, don't want to see further rate cuts. Obviously, any pause is going to be accompanied by the we don't know what's going on with Trump tariffs and all that crap. So they're going to be leaning heavily on the uncertainty stick. Feds Williams says we're in the early days in figuring out the impact of tariffs. There's definitely a risk of higher inflation. His forecast is that inflation will be relatively stable this year with upside risks. Says the uncertainty is very high right now, and there's more concerns about the economy slowing. Will not discount weak survey and anecdotal data. Someone who pays attention to the sentiment surveys like myself expects the economy will continue to grow but slower than last year. Need to keep longer run inflation expectations anchored. Fed Barkin says his base case is that it takes a while for tariff clarity. The current data, though, is okay, but there's a bit of a risk on the employment side. Says more rate cuts require more confidence on inflation. UK PM Starmer spokesman with the no shit Sherlock headline says he expects UK will be impacted by US tariffs this week. Says talks on a new US economic deal likely to continue past Wednesday. So we've got a bit of a timeline coming through about when we're getting this Liberation Day crap tomorrow. He's going to announce the tariffs at a Rose Garden event, 3 p.m. US time tomorrow, which is great. That's 8 o'clock our time. Thank you very much. Right, in a minute, dinner. Says any country mistreating the US should expect a tariff. Then we had Fox reporter Lawrence out overnight saying that Trump is still trying to work out his tariff plans ahead of tomorrow's decision. Says there's multiple plans for reciprocal tariffs that have been presented to Trump, and he says the final decision is likely to come before or the morning of April the 2nd. Then Reuters are out saying that Trump hints that his tariff details may come tomorrow, i.e. today or Wednesday. Says the US will be nice compared to other countries, and says that some tariffs may be substantially lower in certain cases. So we're none the wiser what's coming, really. Trump was speaking about Musk as well, saying he will keep him as long as he can, but at some point he's going to go back as he has a company to run. Further sources, pieces from that, saying that Musk could exit Doge at the end of May to get back to what he does elsewhere. And on the tariff front, China, Japan and South Korea have all reached a consensus, and that those three sides will jointly respond to US tariffs. So that's a bit of palling up between China, Japan and South Korea, and present a response to Trump. Now, Trump has already hinted that if Canada pallies up with the EU on responses and trade and stuff, that he will look to hit them even harder. So I'm not sure what he's going to do against China, Japan and South Korea if they do the same. But a lot of reaction to this tariff stuff is going to come, obviously, after. People may take a day, half a day, just to formulate their plans before coming on. So it's going to drag on longer than just tomorrow, all this tariff stuff. We're going to get plans and then the reactions to the plans. I put up in the chat room yesterday that there's potential strife going on in French politics regarding Le Pen, who got found guilty in a trial of embezzlement of EU funds, which sounds like it's a big deal, but I read the actual details. Not that many people actually reported the details. It was more about her getting a ban and whatever. The long story short is that she used EU funds that were earmarked to pay EU Parliament aides or people, and she used that money to pay party aides. It's not as if she swizzled money out the system and went and blew it on booze and parties. She just paid some people in her party, employees and stuff, with European money, and that's what got her in hot water. Anyway, I'm not making excuses for her. She's been banned from registering for the elections for 5 years. She's got a 4-year prison sentence, which has been suspended by 2 years, and the other 2 years can be served effectively under house arrest or via tags. She's been fined around 100,000 euros. And she's going to appeal it as expected. The big bum fight in France is whether any of that stands, any of those punishments stands while it's under appeal, which official lines say that it doesn't. So she has to serve those sentences and pay up. But others say that the appeals process should halt all that. But that's what's happening in France at the moment as to whether that goes on. Anyway, let the French deal with that one. Oh, yeah, there might be one of those floating around, Nuno. Right, that's it on the headline front. So let's look quickly at what's coming up today, because we get more PMIs, Canada and the US. We also get the ISM Manufacturing Index and JOLTS. So that's going to be our big data points later on. As usual, know what the market mood is going into these things. The market is still hanging around for bad data, likely to react more on bad data than it is on good data. So expect any negative numbers to see more dollar selling, yields coming down again further. While if the numbers are good, you're going to get a reaction, obviously to the upside, but it's very doubtful the market is going to say, okay, everything's fine and dandy. We're going to change our mood. So you know which way things are going to lean and how to trade it. It's good news is more likely a rally sell trade as opposed to bad news buying the dip. But you can pick a poison and trade as you see fit, not how I see fit. So that's what's coming up later on. You guys are a bit quiet this morning. Cat's got your tongue. Give me some questions, what you want me to look at. I'm going to go around the usual stuff as always. Not that there's an awful lot happening. We did have the end of month rolling over yesterday. There was a bit of dollar buying, a bit of dollar selling, a few moves over the fixed moment, but in the end, it all sort of petered out into nothingness. So we had the euro coming down towards this 107.60 level again. Didn't quite get there, then it rallied back to 108. However, look what we've got going on here on the short term. We've got messing around the 108.30. Now we're holding it. Now we're holding it. Now we're holding it. Now we're holding it. But we're still not ready to move properly away from this zone again. And look, it's pretty much been in play the whole month. Hence why I've been banging on the importance of this zone. Okay, you can trade it how you like, but until we get a definitive move away from it, the market is pretty undecided which way it wants to go. We're still holding the uptrend. Okay, so that's still in play. Let's just zoom out a little bit. So nothing is really changed in terms of this. We haven't even managed to get close to the 38.2 of this move. So it does keep the upside in play, but you know, it's going to need something to get it up there. And then it's going to need something to break it for this rally to continue. So at the moment, it's still looking like it's walking along the tightrope, potentially walking on a cliff, ready to fall off, or it's going to keep going higher. But dips are still getting bought into. The levels are still being respected there or thereabouts. We had this break under 107.60. Remember, I said that was a big fat target. Everyone looking at that. So not a surprise to see a flush underneath it, clear all those out, and then straight afterwards we get support there again. So I'd expect it again to be holding support if we get a mooch down there. But otherwise, unless we're above 108.70, you can forget about 109, 110, or anything else for that matter. So we could just be setting up a new bit of range trading like we got down here, 105s down to 103s, 102s. We just had a bit of ranging going on. We might get a bit of that just at a higher level for now. But otherwise, I haven't got a position anymore. I would consider maybe buying a break up through here if we get one, or else if we get a hold, just trading the range from here on out. Sai wants to look at dollar yen, which looked like it was on the fritz yesterday, coming down from, we had that move from 151s, then we had a bit of a bounce in it. As I said, we might just be widening this range. We needed to break under here and get below there, which we haven't managed to do. So it's just possible we haven't yet broken this uptrend, though we did have a crack. Again, a bit more balance this morning. 150s, we're getting into there. Now we're holding below it or trying to hold below it. So again, just getting a little bit of bearish pressure on this morning, but it's not an awful lot. Again, we're just in the middle of this range. So the market just sitting back and going into a bit of what next mode. I would be a bit concerned if we get another quick move up to this 151.25. I was running some buy stops when we were heading up here previously in this move, but I've pulled those now, but I might look at it again. Or alternatively, we hit that level again and hold it as strong resistance, then we probably would then confirm that we still are in this longer bearish trend, and that's when you see a proper flush down towards those lows. Yields being a bit of a driver of this one as well. We're now crunching under 420. Looks like it's happening properly. Although dollar yen isn't, it's had a bit of a love-hate relationship, dollar yen, with yields recently. Okay, sometimes it's on, sometimes it's off. The yen has got its own fish to fry, what's going on over in Japan and the Bank of Japan. So there has been a bit of a disconnect between dollar yen and yield, particularly 10-year yields. So while that correlation is a bit on and off, you can take it generally that yield coming down is going to be softer for the dollar. But it's such a mess with all this tariff stuff. you don't know what's a risk move, what's a fundamental move. If it's a risk move, other currencies move in different ways. So you can keep the usual rule of thumb that lower yields means a lower dollar. But if you see lower yields, but you're not seeing a lower dollar, then you've got to ask the question, what's going on? What is driving things? But it's not a shut your eyes and follow it correlation at the moment. Okay, but coming below 420 here potentially means that we are still edging lower. And all that means is the market gets a bit antsy over growth. It then rotates out of things like stocks into bonds, go for the safety, go for the yield. If your stocks are going to drop 10%, you might as well come out of something that loses 10% in value and stick it in something that's going to earn you 40% in yield over that period. So that's why you get these rotations. But it doesn't necessarily mean that the dollar is going to be affected. If you're coming out of US stocks into US bonds, that's net zero for currency impact. So it's not always FX related in things like this. Aussie dollar, that's still looking pretty weak even after the RBA. As you can see there, we've had this move down again late into yesterday, bit of a fixed move, dollar buying that then just started to reverse around. Not much movement over the RBA. Perhaps you could say them staying on hold was undovish, but we knew that they weren't going to be cutting 50 pips every meeting for the next 10 meetings. So we're back to trading this one. Tech-wise, we're holding below this zone now. So that keeps this bearish move in play. But we've done this a bit before. Okay, we had this move up to 64s, failed. Another move close to 64 failed. The dips are going to be looking around the 62 handle. That's your sort of key level from now. If we get a move down there, I'd expect to hold there. You've got a sort of bit of a safety net with some of these little extensions. But if we're holding under there, then we're probably heading towards these lows, if not more. But otherwise, probably look for a bit of range trading in this one as well. Dollar CAD is looking a bit more active. Now we've got all this tariff stuff going on. We did have a little tap on the 144, which held. Now we've just pulled back slightly to this intra support resistance level that we got bang in the middle of the range here down at the 43.60s. I'm not willing to touch this ahead of the tariff announcement. I want to see what's coming, and then if I decide to, then I'll make a judgment on whether I want to trade this and which way I want to trade this. As I've been saying, this episode feels like there's not going to be we're not going to get tomorrow and he's going to go, oh, right, we're going to kick the deadline to May. It feels like we're really going to get stuff tomorrow. There may still be a question over timelines. He may say, yeah, Canada's getting 25% on this and 25% on that. It's happening now. And then you've got a month to sort it out or something like that. But it looks like this time tariffs are coming on and they're going to stick until people get deals done. But yeah, I don't know. I'm less confident than this is going to be a flash in the pan than I was those prior moments that we had previously. The same goes for dollar mex. I'm going to be very surprised if I'm not turfed out my shorts. And I am interested in having another go up the top if we see some of these levels. But it's going to be a reaction thing. I'm going to want to see some of these topside levels holding again, okay, on tests before I think about jumping in. And I'm not going to be going with as big a trade size as last time, because if we are going up there, it's a different situation to last time as well. Gold, let's have a look at gold and Derege. I'll have a look at Guppy. Yet another bout of buying in Asia. Oh, let's bring it right in. So, as you can see there, as soon as we get to that midnight hour, over here, we get Asia coming in and ramping it higher and not stopping this time. And then what I think we're seeing is we're getting this buying in Asia, and then as Europe comes in, they see it rallying up, the models have to chase it again, and that's why we keep getting these push to new highs, and then it fades out a bit, and then it goes sideways, and then we get to Asia and they push it up, and then the models chase it. So we've got a bit of a pattern going on. I don't know how long that's going to last. Probably when everyone's looking to do that, you'll probably see people starting to front run it, and then those buyers in Asia will go, bollocks, you're not going to front run us, so we're not going to buy it today. And then all those buyers go, oh crap, we've bought it and Asia isn't buying it, so we better sell it, and then you get a steeper pullback. But that's all conjecture, on what people are doing. I have no idea what people are doing. I can just see what the charts tell me, and it's telling me that every morning, early morning here in the UK, sort of middle of the day-ish Asia, we're getting buying coming in that period, and then people are following it up with that. Levels wise, it's doing okay. That was a new line I put in yesterday, just to monitor what's going on here. We did have a spike below, but if you can see, we've got a bit of price action off this level. It's all pretty tight, sort of 10, 12 buck levels at the moment, but that's what the price is doing. We had this dip, came down close to the big figure, and I mentioned that yesterday. Watch the big figure, likely to hold some support. It's got it. Then we got a bit more around here. We had resistance into 27. We got above there. We're sort of holding it. Obviously, it's not that clean, but we're trying to stay above that level. And now we can watch this high again. So stick that up there. Okay, so a nice new line. So let's make that purple because now it's old. So I'm just making these lines white so you can see which ones are new and which ones are old. Okay, so we're doing the same game here. Got the high, we had it here, we had it here. You see how it reacts. See where the support comes in. So if you want to try hitting these tops, since we broke there, 1, 2, 3. There's 3 highs that people could be getting short against, and if they're not taking profit when it's on the table for small amounts, 5, 10 bucks, then they're getting ripped up for a new high. So if you are trying to play the game of I know where the top is, that's potentially 3 times you may have taken a little bit of money or got stopped out, and now you need to catch one that needs to get all that back. This isn't ready for picking tops yet. Okay, and I can't be any more specific or any more harder than that. Wait for the price action to tell you when the tops are coming. This ain't it for now. As I say, you want to scout these little levels, 5, 10 bucks, fine, go ahead. But don't be going, oh, I'm selling this one, it's going back to 2,900, because that's just folly. Guppy Derege, Guppy. Let's see what's going on in the good old Guppy. So we've had a nice tap up. That level there, 195.85, bit of an old level. As you can see, we've pinged that. We are in a bit of an uptrend still, though, just off these lows from February. So that's being maintained. Pullbacks to sort of the 192, 190, 190 level. Anything down there, if it holds again, going to keep this move going, and then maybe a return from that point is going to shift us up further. What are you doing in that one, Derege? You long, you short, you flat? What are you doing in that? It looks pretty clear from here. There's your big level. If you're breaking above there, then you're probably heading up towards testing some of these highs up near the 200 mark. But if not, then you know where you want to be short against, and you know where you want the price to get through, or where the trouble's going to come in there. So 190, 190, 192, and then down into the 190 area as well for that one. You was short. Are you still not short? If you are short, nice trade, mate. And if you're not short, what do you do now? Let me know. Let me know. Right, come on. Anything else while I look around? Stocks saw a bit of a bounce. And we were looking really, really bearish coming into the latter part of last week. But we had a bit of a bounce on Monday. we've got back to this key area here around the figure 56 to 56.20. Okay, this was my key level on the way down. I actually tried it for a long against this level, but that got blown out on Friday in this move. We're back up here now, but look at that. We hit the 61.8, 54.91 pretty much on the nose. So this is, again, this is similar to a lot of other patterns we're seeing. And I was just looking at dollar yen, the same sort of thing. Looking like we were heading lower. We have made a new low. Okay, so that's cracked the egg. Okay, but we've broken this uptrend. If you remember, I was looking at dollar yen. We haven't quite broken this uptrend, but that's the sort of price action you might want to be looking for. Okay, so are we out the woods? Was this just month end? Don't know. Let's see what today brings. But if we can't get through here today, 56, 20, 30, okay, the likelihood is that we are heading to new lows, and we're going to probably come down here fairly quickly and then bust through that low even more and continue this pattern. And that's when you want to start getting your measured moves out, because that means we are potentially heading, you know, all the way down, maybe 53s, 54s, somewhere like that. Okay, so that's the price action you want. Can't get through here. If we can't close above here today, then there's every chance that we're heading back lower into this one. Right, you lot quiet this morning, so I'm going to be quiet this morning. I've not got an awful lot to report elsewhere. Anything else going on? Still keeping half an eye on the Aussie Kiwi, though I'm not looking to do anything at the moment. That's turning around this 110, 120 area again. Another one, bit of a bullish uptrend off this low down here. We've done this time and time again. So there is a possibility of having another run up towards these highs. And depending on the speed and the reason for it, that's maybe where I'll look to test it. But if it's beginning a move that's, you know, that's fairly quick, sort of like that, you know, I mean, these highs, we're starting to knock on the door a bit too often for my liking. Okay, with not so much time in between when we do that, then that would indicate the potential for a break. Okay, so just because I've tried to do it on these two times and it's paid off, doesn't mean the third time is going to work just as well. So always get cautioned. You don't want to get into the once bitten, twice shy type of mode with your training. So always judge a move as it happens at the time. Right, okay, we'll call that a day then. It's going to be a busy one later on, and then we're going to have to weigh through all this Trump stuff tomorrow. Have a great day, everybody. Join me later on Face. Blake's back from his another holiday to Mexico. He's worse than them Greeks, he is, with his holidays. So catch us later, and otherwise I'll see you tomorrow. Have a good one.